And joining us now here on Market Talk to take a look at the trade action after Thursday's session, we welcome in our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, good to catch up with you again, sir. Hope you're having a great week.
Yeah, we are. The market's not so much, but yeah, we're down 8 in corn here, and 8 or 10 in beans, and wheat off about 20, 25 cents. So,
Mhm.
um, kind of a blasé day. I'll put it that way. I had 3 consecutive closes in corn that were higher, but each one was a little bit less than the previous day, and each day the close was well off the high. So just not holding the rallies right now and consolidating.
Yeah, it felt like on Thursday, the general thought and feeling of the trade that the path of least resistance was to the downside, is what it seemed like. It wasn't a whole lot of fresh news. I think it just felt like the trade was like, well, there's no reason to go higher, so we're just going to go lower. That was my general feeling, Bryan.
The old saying is it doesn't take anything newsworthy to allow prices to drop or drift. You need something to feed the bull or at least, generate some buying interest in between a recovery in the dollar, which is kind of sharp today, and sort of the OPEC news seemingly having
Mhm.
some impact, but limited. One might have thought, boy, if you're cutting 2 billion or 2 million barrels a day, the market might find a $10 or $15 rally in crude oil, but maybe that was countered a little bit by the administration saying they'll continue to move oil out of the reserves, and that's open for debate whether that's a good idea or not. But it certainly probably helped keep price uh, surges in check. So yeah, kind of a blasé day. Stock market down, meal down, corn down, beans, wheat. Soybean oil was a bright spot up a little bit today, and maybe some spreading there, and
Mhm.
the energy markets trading higher, close to a dollar on crude oil. But with these grains, I think it's just kind of the harvest sort of blues right now. Things are moving right along, pretty dry out there. People are getting going pretty fast, and trying to beat
Mhm.
some rain that's in the forecast.
Well, and you mentioned that harvest kind of blues, and it's that typical seasonal pressure, it feels like. I know as well, I'm hearing a lot of reports, and maybe you are as well, that some farmers are finding a little bit better than anticipated yield in corn and beans across parts of the corn belt. Not great, amazing, not a record, but considering all the heat and dryness we had, there's some spots that they're finding a little bit better yield. And I wonder if some of that chatter is kind of feeding its way into the trade a little bit.
Well, it is, and but that's typical harvest. So
Yeah.
so I would tell you the theme that I would relate more in talking to customers, which Um, it hasn't been heavy because they're busy. So the typical guys that'll call in and let me know I'm searching and they're busy,
Mhm.
and I respect that. Um, the other thing that's kind of overhanging this market is just, how long might we get an issue or have an issue with low water levels in the Mississippi? And what does that really mean? It's not a bullish factor by any stretch. It never is when you have
Mhm.
holdups on movement. And so I think that reality is starting to sink in. The news wires had this, story about Ingram Barge Company
Mhm.
declaring, I believe it's pronounced force majeure, which just basically says due to circumstances beyond their control, they can't be held or fulfill their contracts. That's kind of a big deal. That tells you how dry it is down south and the issues with barge traffic.
Well, and we think about that issue, and I know we've seen here just the last week, even basis along the river terminals. I mean, is taking a pretty big hit. And you think about some parts of the country, basis is still fairly strong, but not along the river right now with those river issues. And one has to wonder, what this cash market's going to look like here in another couple of weeks if we continue to have issues on the Mississippi, Brian.
Well, and as you said, the base is lowest starting the wide, so that's typical in harvest. But now you've got this added onto it, so now
Yeah.
farmers are kind of scratching their head, especially those who said, I'll see what I've got. And if you are one of those that maybe have a little better yield or looking like that, now you're starting to question whether you actually want to sell it now. We're still at a very high price historically, so I need to always come back to that first of all, and then second of all, if you're blessed with a good crop. I guess I would argue be careful not to get too greedy. So I'm a little bit more of a bird in hand, but it's also my nature to understand, and I hope I can make your listeners understand that you don't have to own it in a bin. You can own it in a different capacity. You're only a phone call away. Some of that contains unlimited risk, just like owning it in the bin does. Some of it can be a fixed risk position, but you can buy time with that. And so I'm concerned about the Mississippi. I'm concerned about just the end user hand to mouth. We really didn't have a good export sales number today in corn. It was pretty terrible. Um, and I'm just trying to look that number up. I think it was like
Mhm.
8.7 million or something like
Yeah.
that. So it was not good in corn. Soybeans was pretty solid, 25, 27 million bushels in there.
Mhm.
But corn 8.9 million. That's pretty soft. That's telling me the end user is only buying what they need, and whether they feel the market's too high price, they can hold out for a while, or they're just waiting for some harvest pressure. My guess is they're just waiting for some harvest pressure.
Well, and to your point, weekly export sales were rough, and there's a lot of demand concerns with high inflation and et cetera, et cetera. And also back to your thoughts about not having to own it and keep it in the bin. Thinking risk management, I think it's important to for guys and gals to not lose sight of their risk management plan here during harvest with all of these different news items swirling around the trade, Brian.
Well, that's exactly right. There's I can go through a litany of them between the higher dollar and then rising interest rates and then Mississippi water
Yeah.
levels and Ukraine and harvest pressure and weather. South America, CONAB today comes out looking for bigger production. CONAB is the South American estimates, but in corn production, last year's 112.81 million metric tons. They're looking for 126.94. Most of that coming from increases on the second crop, 85 million last year, 96, so 11 million metric increase in corn, looking for bigger exports. So Brazil is really, a force to be reckoned with. Then again, weather plays a big impact in that part of the world. So we'll have to see, or we can only wait to see what weather will do. But there's just so many variables that it's important not to lose sight of taking some time to look at the marketing perspective. Don't let this thing get away from you.
Definitely, very, very true. Thoughts on this wheat market a little bit more, Brian? I've noticed here the last couple of sessions, especially in Chicago wheat, there's been a little more pressure there. I know on Thursday it was all three, but that Chicago wheat complex looking a little scary right now. It feels like, but I wonder your thoughts there.
Well, it had, first of all, it had a good rally and a good run. So if we look at, for example, the December contract last week peaked at 945 and three quarters. Here we are 879 today. So all of a sudden 45 and 21 is what, 66 cents. We're off that high. But today's low was still higher than the low that we had at the end of September. So you've got a nice uptrend. Didn't violate anything today, did close under or at the 21 day. We're under a 10-day moving average, may have tripped some stop orders. The higher dollar is kind of the culprit, I think, in the wheat market, and we're just overpriced compared to everybody else in the world. And so we're not going to see the likelihood of the world, running to the U.S. Still nice uptrend. I'm not concerned today, but if I would see December Chicago close somewhere under maybe 870, then I'm getting a little bit concerned that we could be breaking the near-term uptrend. We still got, from a bullish perspective, we've got this nice inverted head and shoulders formation, nice uptrend. All that still points to about $10, which is a 50% retracement of the high that occurred in spring to the low. So want to remain optimistic. We think the Ukraine Russia thing, that's just a mess. We don't expect, today, at least I don't expect that Putin is going to extend that agreement. There's some real opportunity there for maybe wheat to have to be exported from elsewhere. And we might be in line for that. So want to stay a little bit optimistic on that big picture front. Um, yeah, a little worried about dry weather in parts of the plains as well.
Very, very true. Very true. Bryan Doherty, Senior Market Advisor, Total Farm Marketing, our guest today. Bryan, I don't want to lose sight of the fact that coming up here, we're a week away from the October World Agricultural Supply and Demand Estimates report. Considering the changes we saw in the quarterly grain stocks and how those get factored into the WASDE now, what are your thoughts here as we're starting to get some private estimates out, et cetera, ahead of that WASDE report? Just what we could maybe be anticipating coming up next week.
Yeah, so a couple of things. One, you had the quarterly stocks report for corn and soybean in particular. The wheat was as expected, but the soybean number was a little heavy. It was 32 million bushels above the pre-report estimate. So in theory, you're going to take that number and tack that on to the projected carryout that was 200 million for the year ahead. That is the 22-23 marketing year, and that'll show up as a bigger carryout number. And so but boy, the soybean market has really taken its share off of that. Gosh, in the supply and demand report last month, we had a favorable crop reduction, and we shot over $15, and here we are, down to 13.50. So we'll probably look for a little bit heavier carry out, and then there's the yield projections, and I don't know. I don't think there's been enough harvest to really get your hands around it. I wouldn't necessarily expect any big changes. The old saying is small crops get smaller. And I would argue that in corn, maybe that 172.5 does edge closer to 170. Remember, the first is generally your best harvested corn, generally. So you heard some better than expected yields, but I think it just depends where you are in the country. If you got a timely rain, and that's the same theme I'm hearing in soybeans. If you're in a good spot, you're really pleased. If you weren't, it's 10, 15 bushels less than your average, or 5 bushels. It's just a really mixed. One farmer put it's a mixed bag of bolts this year.
Mhm, mhm. Let's talk livestock, Bryan. Hogs, probably the only ag market that really had a solid day on Thursday. Another good week of export sales, I think, probably was a lot of fuel to that fire there. Cattle were just kind of mixed on the day. Export sales were okay. Thoughts, though, in this protein complex, again, it feels like maybe, fingers crossed, we found some support in the hog market potentially here, Bryan.
Um, well, to your point, the exports. Now the market, I think, got unduly beat up and overdone
Mhm.
anyway. And then we had yesterday, we had a nice comeback late in the session, some follow through, but still trading $10 off of where we were a couple of weeks ago. Um, so nice to see some buying interest in the hogs, and it almost looks like the traders are willing to buy hogs and sell lives and sell feeders today. The live market seems to have good support in that 145 area or better. The biggest concern that we continue to hear in general is just this idea that um, consumers aren't going to chase it, and demand is going to diminish, and more of a hawkish view again by the Fed today. The worry is they're not going to slow down. There was some hope that we'd see some slowdown in interest rates, and that might have come out of one of the countries in the European Union that only low or raised at a smaller pace, and so there was some. But everything seems to point to another 0.75% increase, and so you have all those things kind of overhanging the market. Yet, I'm going to continue to make the argument: limited supply. The newest drought monitor map continues to look terrible.
Mhm.
So if you're in the West anywhere, and now it's creeping into the central Midwest, um, what kind of fall pasture conditions is it's dry.
Yeah.
And then what does it look like for spring? So I still think that keeps the supply limited. It's not the right equation. You really need to see the corn market dump off, I think, a couple dollars before you'd say, get people confident that they're really going to want to, beef up their, don't excuse the pun, but beef up their cow herd.
Yeah, very, very true. And I know, of course, the economic concerns, the dollar, monetary policy is overweighing everything, consumer demand in the beef and pork sector, at the grocery store, et cetera. But, it feels like some of these economic concerns that you mentioned the dollar before, and we've talked about this at length, Bryan, but it just feels like traders are they took a couple days of a breather thinking things were okay. And then we're kind of coming back, as you alluded to a few times here, with more pessimism, it feels like in this broader macro sector, Bryan.
Exactly. Well, and you mentioned the dollar, and you just can't help but feel that way. It's the volatility in that is really high lately, but big updated day turnaround yesterday. We're still well below where we were last week. So last week we were as an index 114. Today we're 112, but we were also closing in on 110 last week or 3 sessions ago. So this idea that maybe we'd get a bigger correction in the dollar seems to be, waning a little bit when you hear about this kind of like I mentioned, the hawkish view by the Fed that they may raise interest rates. So the pullback in the dollar, looks like a correction on a bigger chart. And the bullish dollar traders will continue to argue we're heading to the 120 area. That's what it's going to take to slow down inflation. I don't know. I that's
Yeah.
above my pay grade, but the Federal Reserve, in theory, in its collective whole, has a view that they'll institute. Although I've been, disclaimer, I was critical of them early on that they were
Mhm.
calling transitory inflation, and there's a lot of arrows that seem to be pointing otherwise. But
Yeah, very true. Very true. Brian, how about that dairy market? What are you seeing there as we look to wrap up the week?
consolidation. We continue to see some up, then some back, and then some up. And today's kind of a prime example. Looks like we're just trading about flush today, but a good recovery here from last week after a hard dip. So I want to put this in perspective. If we use, let's just say, I just happen to be looking at the December milk contract right now, 21.32. That's the same price we were in mid-July, and we were a little bit higher and a little bit lower, Jesse. So when you look at the overall trend of milk, I think well supported on cow numbers, um, demand concerns, the dollar, and just the consumer with inflation. So we're probably pretty fairly priced right now. It's hard to, I want to be optimistic, but hard to be optimistic above the low 20s. And historically, we have to remember again, it's like 6.75, $7.
Mhm.
These are high prices historically. Is the consumer used to these and just the new norm, or is this one of these patterns again where we think, well, this is it? Corn's going to stay above $6 and milk's going to stay at 20, and a year from now we get $18 milk, and then the year after that $15 milk, and we've got 5 and 4.50 corn because we figured out how to produce a lot more. We don't know yet on that. It doesn't seem like that's the feel of it because of input costs, but um, it's a challenge right now. If you're in any of these agriculture, as you look ahead, the cost of things, especially with dairy,
Mhm.
we need to see the demand kick in. Milk, the milk futures need to see the demand kick in harder than it has been to really get another boost.
Brian, fantastic thoughts as always. Floor is yours. Final question. Any other thoughts you want to share with us or anything else you want to reiterate here today?
I just like to share that harvest season, everybody's working hard and a lot of hours. Stay safe. Take just an extra minute. Stay safe. Um, Keep an eye on these markets. Strive for
Mhm.
balance. What we spent a lot of time today was talking about a lot of variables that might
Yeah,
creep up and become very important. A month ago, we weren't thinking low Mississippi, that type of stuff. Things are always in dynamics. So let's make sure that we keep talking, keep looking, keep being strategic.
very true. Well, I know if farmers have questions, want to talk about their marketing plan, maybe they are riding around the combine, got a little time to make a phone call. I know they can reach out to you and the folks there at Total Farm Marketing on the phone very easily. Your website, totalfarmmarketing.com. A lot of great ways to get in touch with you and the team there, isn't there, Brian?
There is the easiest way is like you said to if you're into combine, just give us a shout. Let's talk, and we get to nail whatever your question is right away, or concern or even complaint. So happy to field any of that. The the website has a lot of great useful information on it. So totalfarmmarketing.com, or if you want to take some time, just shoot me an email. It's Bryan at totalfarmmarketing.com, and throw your question or comments in there, and I'll get back to you as quickly as I can.
Fantastic. And I know as well they can give you folks a call there, 800-334-9779, the number to get a hold of Total Farm Marketing. Brian, always a pleasure, sir. Thanks for the time. As always, have a great rest of your week, and we'll talk to you next week.
Jesse, I want to thank you. Appreciate it. Keep up the great work.
Brian Doherty with Total Farm Marketing joining us here today on Market Talk. It's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.